Welcome to Framework Fortune. I'm your host Ben. If you're new to the channel and you want to learn how to day trade, invest in the stock market long term, fix your credit, build the framework for your financial freedom, start your journey now by hitting that subscribe button and the notification bell. So today I'm going to be talking about moving averages. If you don't know what moving averages are, it's simply enough average price of the stock over a certain amount of time, and it actually makes a trend line. So for example, a simple 50-day moving average would be the price averaged at where the stock closed over the past 50 days, and this will actually make a line on your chart, and you can use these moving averages for support and resistance lines, as well as for your entries and exits. So let's dive into Thinkorswim and take a look at some examples. So now that we're in Thinkorswim, we're going to be taking a look at my daily chart, and this is over the span of a year, so each candle equals 1 day and the whole chart is 1 year. And right away you can notice there's 3 lines on my chart that are 3 different colors: red, blue, and green, and all 3 of these are moving averages. So let's take a look at this. So the green line is the 9 EMA, and that's the exponential moving average for 9 days. The blue is the 50-day moving average, so the price over the past 50 days averaged. And then the red is the 200-day moving average. So as you can see right here, through September and October, this little window right here we're going to look at, well, while it's below this green line, the 9 EMA is going to be resistance. So it's going to be a little bit tougher for the stock price to get above that. Okay, and you can see it just continued to drop until the EMA dropped, and finally it crossed over the EMA right here on October 16th. And once it did that, you can see it went from a price of $1.90 all the way up to $2.75. So just with that one moving average, you could see a chance to make some profit there if you was a swing trader looking for it to cross back over that 9 EMA. And you can see it rode above the 9 EMA, becomes support for a couple of days. This candle dropped here, bounced right off the 9. This candle as well, then this red candle. And it cracked right here. You can see on October 31st it was back below, so now the 9 EMA is resistance again. But you can see it crossed back over the 9 EMA all the way down here at 11.19. And it hit that 50-day moving average, but they were really close together, so it ended up breaking above. And you can see once it crossed over right here, it went from 207 all the way up to 349. So now both these moving averages act as support right here on this day. This candle dropped down and hit right at both of these moving averages and bounced back up. Now of course it did crack down some more, and it took a little bit longer to here recently, December 20th. You can see it crossed back over both of these. Now at this point, swing traders could be like, okay, if these moving averages hold up as support, then I could take an entry here and swing trade this until it gets up to the 200-day moving average. And if you would have done that and got in right around 264, you can see that it had to move up all the way to 420 at that 200-day moving average, and this would have been a nice little swing trade right through here. Okay, but of course the 200-day is going to be your strongest resistance, so it's going to take some type of catalyst and a lot of volume to break that 200-day moving average. So it hit, it came all the way back down, and you can see it went sideways, riding up these 2 moving averages all the way up to the 200 till the 9 EMA almost crossed the 200. And right there you can see you had this big jump from 391 all the way up to 1338. So by looking at these moving averages, we know once it gets above all 3 of these moving averages, it's above 3 major resistance lines, which is the moving averages. If you don't know what support and resistance is, you can go in my day trading playlist and watch the support and resistance video. But basically, support's going to act as your floor, resistance is going to act like a ceiling. But once it got above all 3 of these ceilings, the 50, the 9, and the 200, it was able to go on a massive run because you no longer have any more resistance back here on the chart, right? Because all these moving averages are down here. So you saw it went straight up, and then it came back down, and it kind of bounced off of that area where those moving averages are, because those old ceilings became new floors for this stock. So you see the bounce there, and the stock went on a nice run even higher than $13, all the way up to $19. Okay, and you can see the 9 EMA is still riding kind of up with the price, and when the stock had a big old pullback, it came back down to the 9 EMA right here at 772, and then it has continued to move. So you want to buy at these crossover points and sell at resistance points. So you buy right here at this crossover of the 50 and the 9 EMA, and then sell at the 200-day moving average until you get some type of catalyst to really push it through that 200-day moving average. It's not going to break through it, but you can see that it got a catalyst, which was the coronavirus happening, because this is NNVC and the stock has been hot for the past week or two. But as soon as it gets that catalyst and the 9 EMA is able to cross over that 200-day, now you get this big rip. So let's take a look at another stock. The stock price of BIMI was running below the 9 EMA. When it crossed over, it moved up to the 50-day, but it had to pull back because that 50-day is a ceiling right now, so it's resistance. And then when it couldn't break that, it cracked back down, and it's back below that 9 EMA. So the 9 EMA is a ceiling once again. So you can see it came up and it hit, but it couldn't break through this 9 EMA all the way up until this point here. And at this point here, it broke through, it came up, and it must have had a pretty good catalyst, or it got pumped or something, but there was enough volume. You can see back here there's no volume, and then all of a sudden right here the volume bars come up. So you can see it pushed through, and the 9 EMA crossed over the 50-day, and when it did that, you could look for an entry there. And then the stock came up at $3 to the 200-day moving average, which is going to be resistance, but it had enough volume to push through. So you can see once the 9 EMA crosses the 50, it crosses the 200. You could also look for an entry there at that $3 mark, and then you see it goes on this nice massive run all the way up to 981, because you have no more support and resistance, no more moving averages back here. It's above these moving averages, and when a stock gets above all three moving averages, it is now considered bullish, and when it's bullish, it can run. And on top of that, like I said, there's no support and resistance to hold it back here besides your natural support and resistance. And as you saw, it went up, and it came back down, and guess where it bounced at? Right here off of this 9 EMA. So 9 EMA held up a support there, and it went on a nice little move from 445 up to 814. Then it dropped back down right there to that 530, right above this 9 EMA, and it had to bounce back up to 633. Now it hit here, but it dropped below, so this floor is no longer a floor again, it's a ceiling. And you can see the stock keeps coming up. It did have one day where it popped above, but it came right back down, and you can see it's hitting the ceiling. 9 EMA is a ceiling. So then the 9 EMA crosses back below the 50, and of course the stock is still having a big sell-off, and the 200-day is your bottom floor now. So it didn't bounce here, it actually dropped below the 200 as well. It came back up, broke back above the 200, hit the 50 again. You can see right here, the top of this green candle, it hit the 50, and it couldn't break. So it comes back down. This day here, it popped above both moving averages, the 200 and the 9 EMA, and it went from $3 up to $4.56. So you can see it crossed over, and then it crossed over the 50-day, and you had this quick little pop. And then over the next couple of days, you can see it got over all three indicators again and went bullish. Now, the reason right here it didn't have this big massive move, because stocks can't constantly have big massive moves like this. They will have them over periods of time, but because of this, traders see that, and they know that's way overpriced. So you get a smaller move right here after the initial big move, which that's okay. You can still profit off of these smaller days like this. After all that, it came back down, and now it's riding on the 200-day moving average, so it's still acting as your floor, and the 9 and the 50 are still acting as resistance. So you're getting a lot of consolidation in this area and not getting any breakouts, and then you can see it drops back below the 200 and the 9 EMA, and it's not until it crosses over all three of these again, and as soon as the stock price is above all three of these again, you can see this big candle here very recently from $3 up to $5.58. So you're just using these moving averages as support and resistance and as entries and exits, so you know where to buy a stock and where to sell a stock. So here's the 5-minute chart for BMI. Now I use the daily chart, of course I've got it smushed up here, but I also use the 1 minute and 5 minute. But on the 1 minute and 5 minute, I only use two indicators. I use the 200-day moving average, the red line again, and I use the VWAP, this white line. If you don't know what VWAP is, it's volume weighted average price, and I have video on that in the day trading playlist as well, but it acts the same as the moving averages do as support and resistance. And you can see on this chart, the stock opened up, it dropped to the 200, and the 200 is your floor right now. So it bounces off of the 200, and you could buy right here at the break of the 200 at 304, and you could sell at the VWAP, because that's your next resistance that you're selling, at 320. And if you wanted to hold to see if it's going to break the VWAP, you could do that, and you could see it run up to 339. Now of course that was only a quick run, but it drops back down below the VWAP, curls around right here, and breaks back above the VWAP, and you get this big nice move from 325 all the way up to 466. So these indicators will work on your daily chart and on your 1 minute and 5 minute charts. Now I don't use all of them, I only use the 200 and the VWAP because I don't like my charts really crowded. But they give you a lot of information and help with where you're entering and exiting trades at. You don't want to be entering and exit trades blind. This also helps you when you have a good entry in a stock but you don't really know where to sell at. You want to sell at one of the EMAs, and if you take a look at both of these together, then you can see your support and resistance lines up here on these moving averages on your daily chart, and then you can see them on here as well. Now they're going to act different on your 1 minute and 5 minute than they are up here, so you have to look at both of them. So if you take a look right here at 306, you can see that's where all three moving averages are together. So when the stock opened up on the 5 minute chart, or the 1 minute if you're looking at the 1 minute, it also dropped right to that $3 area. That held up as a lot of support, so you get a good entry there. Now where do you want to sell? You want to sell at your next resistance line. So the VWAP is your next resistance line, and if you don't want to sell there, you want to see if it breaks, you let it break, and then you can sell once it's way off of this VWAP. The VWAP acts as kind of a price magnet for the stock. If it gets too high above the VWAP like it did here, you can see the stock is all the way up here, the VWAP's down here, it's going to act like a magnet and pull the price back down to the VWAP. Same thing on the other side, when it goes below the VWAP too far, it's going to act like a magnet and pull the price back up to the VWAP. So that's how you can use these indicators to get in and out of trades safely and get those good entries that you're looking for. And if you're using Thinkorswim, I can show you real quick how to add these to your charts. So all you do is go to Studies and go to Edit Studies until you can put in Moving Average, and you can see there's all kinds of different options, but I just use the Exponential, so it's right here. So you just double click until it comes over here, then go to your settings, and then linked would be the amount of days, so 200 for the 200 day, and then I change the color and I like mine to be red, and that's all I do. You press OK, apply, OK, and you have them on your chart. So hopefully this video has helped you understand what moving averages are and how to use them in your day trading and swing trading. If not, if you're still unclear on something, then leave a question in the comments below and I'll answer it for you. Also, if you're hearing some terms that you don't quite understand, like support and resistance, VWAP, things like that, then click the day trading playlist above and you can find those videos there.